The S&P 500 just hit the 99th percentile. And the S&P at this level has historically marked a regime inflection. Something is breaking beneath the surface and the data confirms it. Right now, the S&P 500 is at 7,230.1, the 99th percentile for the past year. Historically, the S&P at this level has historically marked a regime inflection. Says the data needs to confirm. The commodity analyst says we are in a commodity supercycle driven by underinvestment and deglobalization. In the next few minutes, I will show you who the data says is right and what it means for your money this month. The scoreboard just changed. When a speaker moves on the scoreboard, it means the data changed, not the opinion. That distinction matters. The commodity analyst's commodity supercycle call is paying off. Oil at $101.9 and trending their direction. 133-day streak, score 1 for Gammon. Credit will blow out. Yield curve agrees at 0.51%. Score 1 for Snyder. Dollar liquidity crisis. Yield curve agrees at 0.51%. The volatility expert's volatility expansion call is paying off. VIX at 16.9 and trending their direction. Too early to call McIlroy right or wrong. The thesis is building but not confirmed. 132-day streak. Too early to call Hartman right or wrong. The thesis is building but not confirmed. 126-day streak. The dollar analyst just moved from early to wrong. The dollar analyst call is not working, for now. Gold moving against the bearish thesis, up 0.7%. Score today. 4 right, 2 early, 1 wrong. When a speaker moves on the scoreboard, it means the data changed, not the opinion. That distinction matters. Today's big question: are commodities in a supercycle? Or is this the top? On one side says the data needs to confirm. That is the setup. Everyone hears it on the podcasts. It sounds convincing. On the other side, the commodity analyst says we are in a commodity supercycle driven by underinvestment and deglobalization. Two smart people, opposite conclusions. So who is right? Here's what makes this interesting. Oil is falling while gold is rising. Those two signals should not be going in opposite directions. When they diverge like this, one of them is lying, and the resolution is usually fast. Oil at $101.9, 97th percentile, down 3% today. Gold at $4,644, 76th percentile, up 0.7% today. Copper at $5.98, 93rd percentile, up 1% today. Bottom line, right now the commodity analyst has the better case. Oil at $101.9, 97th percentile, says the data is moving their direction. If oil drops below $80, the supercycle call is in trouble. Right now it is at $101.9. If copper breaks to new highs while oil falls, it is demand rotation, not a supercycle. Oil at $101.9 is in the 97th percentile, reversal territory. If it drops below the 75th, the thesis weakens fast. Gold at $4,644 will track it daily on the scoreboard. Phase 1 is the good times, but good times do not last forever. Here is how close we are to the edge. We are 69 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment grade spread crossing 150 basis points. Currently at 81 basis points. At this week's pace, that is roughly 69 weeks of runway, that is late August. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has yield curve, initial jobless claims flashing red. Gammon says the Fed is breaking things and credit spreads will blow out. The data agrees with that assessment. Phase 1 holds with 69 basis points of buffer. Conditions favor risk, but do not get complacent. Wall Street trades the index. We trade the ground. Here's what the ZIP level data is screaming about today. Dukes, MA, payment burden is past the breaking point. Falmouth, MA, median home about $1,453,000 on about $74,000 household income. Price, to-income ratio, 19.7. When the math stops working, sellers find out before buyers do. Lee County, FL, payment burden is past the breaking point, 33,921 FL. Median home about $2,300,000 $308,000 on about $122,000 household income. Price to income ratio, 19.2. When the math stops working, sellers find out before buyers do. Routt County, CO. Builders are pouring concrete where nobody can afford to buy. Routt County, CO permitted 597 units this year, up 81% year over year. Affordability score in 80,000, 487, 0100. Supply chasing demand that doesn't exist at these prices. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, are commodities in a supercycle, or is this the top? Let me show you what happened the last time we were here. Oil at $101.9 is in the 97th percentile. That means it is higher than 97 out of 100 days in the past year. In 2022, oil spiked above 120, then demand destruction pulled it back 40% in months. In 2020, oil went negative for the first time in history as demand collapsed. In 2018, oil dropped 40% in Q4 as growth fears overtook supply concerns. Different environments, different catalysts, but every time, the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, copper at $5.98 is in the 93rd percentile. The last time both oil and copper were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. If history rhymes, the commodity analyst is on the right side of this trade. The data is not ambiguous. Here is what the data says to do right now. Stay alert on VIX. It is dropping 10.2% today. Fast moves demand attention. Avoid Phoenix at 40% payment burden. That is stretch territory. Phase 1 holds. No alarms, but the runway at 69 basis points is shorter than last month. 4 out of 7 speakers are right. The commodity analyst, Gammon, Snyder, and the volatility expert. When this many aligned, the trend usually has legs. Every signal is live at analyze.builderslens.com. 7 speakers, 65 signals, 1 question every morning. Who is right? Subscribe, and I will see you tomorrow morning.